All right. Good morning. Morning, everyone. Let's kick it off. All right, last night you can see there was quite an avalanche there at the very end of the session. We were trading in positive territory when we really bombed out in the last half an hour. That was basically due to the fact that the European Central Bank came out and said that they weren't going to accept Greek debt as collateral. I think that one thing that was really interesting to me about that the timing of the release is simply that it was literally at 10:30 European time or 10:30 South African time when this release came out, and whatever. I mean, maybe it's 9:30 in one of the countries there, but either way, it's an odd release in terms of timing. Another thing that obviously happened yesterday is we had the PBOC that came out and cut reserve rate requirements on the banking system there. I actually don't think it's as aggressive as the people wanted them to get. People I think looking more for an outright interest rate cut, which they didn't get. You've got SHIBOR rates, which have been drifting up there over the past couple months and starting to put pressure on on lenders. That's rising. It's helping to not artificially, but to help push up interest rates, even though that the central bank rate may be a little bit low. So, that's created a little bit of a short-term problem there in China, and that wasn't really fixed by what they did yesterday, or at least the market didn't view it to be. So, obviously, you didn't get that. You didn't get the support, for the commodities, or you did initially get a short-term bump up, and then after that, everything faded back down to the lows. Crude oil got smoked last night, down about 7%. We were trading north of north of $54 on light sweet yesterday. No, sorry, day before yesterday, we were trading north of $54. We're at 47.48 at the moment. I mean, so we've got an incredibly volatile atmosphere right now for commodities. For just the markets in general, and like we said this before, it's not a positive environment for stocks. We've seen stocks rally really hard, but I don't with this kind of volatility, I don't know that it's going to be sustainable. But one of the stats I read yesterday, the last month has been the highest currency volatility in the last 2 decades, which is something spectacular. So that's something else to take note of, and I think that makes everyone's life more difficult, from companies to central banks, etc. Obviously, it has to do with all of the interest rate cuts, and we're getting a lot of guys kind of going from one end of the spectrum to the other, and starting to look a little bit messy out there. We also had ISM non-manufacturing out in the States yesterday, rose a touch. ADP employment numbers came out a touch soft. Disney up 8% yesterday after great earnings. Obviously, all the merchandise I've been selling to my daughter on the freaking Frozen stuff has been making them a lot of money. Bottom line is, a couple of good earnings reports yesterday out of Disney and Visa. All right, if we look into the Asian session this morning, obviously Shanghai traded up nicely on the back of the reserve ratio cut, but the rest of the Asian markets were mixed. We had Australia up again a little bit, Hang Seng up a bit, Kospi and Nikkei both down a touch. The Nikkei starting to suffer again a little bit because of strengthening yen. It's starting to look a little bit like this yen trade is over with, and for the guys that are punting currencies out of there, looks like we could really see some yen strength. Everybody else is kind of joining the same game that they've been in, and I think everybody's been playing this thing as a funding currency. A lot of people probably still short of it, and it might be due for a big bounce out of the yen. If we look at what's happened in Australia, again, we had a little bit of different leadership this morning. We didn't have the miners leading the way. We had some of the banks leading, I think, on the day. I don't know if that's because the interest rate cuts may be taking a little bit of pressure off of them, but if I'm not mistaken, Australia is also trading up near 7-year highs or something like that. So that's quite impressive to me, and if that is the case, and I don't believe that that's going to end up lasting because of what they're attached to on the commodity side. All right, if we look at corporate action, we've got Philip Morris out before the bell today in the States, as well as Estee Lauder. Nothing else here locally. Then we've got market data. We've got German factory orders right at our opening bell. We've got SA business confidence at 11:30. We've got the Bank of England rate at 2 o'clock. We've got initial jobless claims in the States, trade balance, and Bloomberg consumer comfort numbers. Okay, let's get into the maps. Okay, the first thing that we're going to have a look at this morning is, here we go, we'll look at, did I type that in right? No. All right, we talked about yesterday the Aussie breaking out of what actually a huge technical level. And we broke out of that convincingly on, I guess it was Tuesday's session. Yesterday, failing it, I wouldn't say spectacularly, but definitely failing it on a big reversal day. We opened up at 46,000, only to trade all the way down 450 points from that level into the close. This morning, opening up lower again. This could be one of those moves where you get a bit of a false breakout and then a major reversal. If that's what happens, then we've got a long way to fall. So just watch this one closely. Could have caught a lot of those guys on the wrong feet, a lot of the technical guys, a lot of the momentum guys. I could have gotten on the wrong foot there. Look at CFR this morning. I was looking at this yesterday because this is the yearly in CFR. This is it's a wild play at the moment because what the Swiss currency's been doing. But last night it actually traded up a lot after hours, after our close. A lot of that was due to the currency. We weakened about probably 0.75% into the close, which obviously bounced this thing up into the Swiss close. But there's definitely some sort of head and shoulder formation here. And to me, I wish that someone could argue this point with me because I can't figure out why it's still up here. After the we were trading south of this after negative numbers out of Richemont. We got the Swiss National Bank revaluation, or they dropped a peg. We've had a huge appreciation in the Swiss franc, and to me, all the earnings are coming outside of Switzerland, so it doesn't matter where the Swiss franc goes. They're going to be trying to import huge inflation or export huge inflation to the rest of the globe, and I just don't see how the sales can hold up under that kind of circumstance. Maybe I'm looking at the wrong type of thing, but bottom line is that I've got a bit of a bearish view on this thing fundamentally as well. Technically, it definitely looks like if it can hold below 99. 99 close to this 100 level here, which is where real resistance is. If we did pop all the way up to here, it would still be looking very head and shoulder-ish. So I think it's got to get above 100 in my mind, for this thing not, to break out of this head and shoulder pattern. I think personally, fundamentally, and technically, this thing's looking a little bit under pressure. So I'm going to be watching this thing very, very closely over the next couple of days. I actually let some out yesterday to try to predict that this pattern was going to play out. We'll see how this thing works. I see that Swatch came out with numbers just a little while ago, looking a little bit soft on operating profit, 1.75 billion Swiss franc versus estimates for 1.9. We also have an upgrade out of Richemont this morning by Berenberg, so I don't think that's going to really make a difference. But anyway, keep all that in mind. All right, Telkom yesterday. Telkom broke out from this long consolidation we've been looking at. I don't really pay much attention to this stock, but I don't know what the catalyst was. I don't know if there was any news there that drove this. Bottom line is we broke out. I think we almost kind of got to the target, which would be up at close to $75. So I don't know if there's a lot more meat left on this bone, but this has been a long consolidation here, so you could get a little bit more out of it. Sunlum, huge run yesterday. You kind of always knew this thing was going to come back up and retest these highs, up here around 73.20, 73.30. I think we probably get there in the next day or two, at least to give it a kiss goodbye if it doesn't work out. But bottom line is, watch that level. If it gets above there, we could see a nice breakout in Sunlum. Now, last one I'm going to show is Coronation, which I've been kind of waging war against this thing for a long time. I'm now out of my short because I just kept getting tired of this thing pulling back and making big bounces. right at 103, this big support. We've been trading underperforming the market horribly in the last probably 4 or 5 sessions. So I think watch this level closely. If we drop 103, I might be tempted to re-enter a short here. There's definitely some support there. We drop 103, and especially if we drop $100, then I think this thing could get heavy. And these are very cyclical stocks, and we start to get in this real volatile environment. If markets were to start sell off, you would expect this thing to probably go with it. So watch it over the next few sessions. And that's it for today, guys. Good luck out there.